Thursday, and you're tuned into my stock scanner live. The week is nearing its final. Let's see where momentum is strongest. Lots of stock analysis on the show today. Tesla, Microsoft, Samsung, Nordea, Meta, and much more. Hans-Henrik, Nielsen, Liam Flavelle standing by. Hans-Henrik, 3-point playbook portfolio sits at almost 5%, 4.9. Last year, 34.48. And we're looking to buy again. That's no secret. But how does it match the dollar drop if we're looking towards the American market and maybe buying there?
Well, it doesn't, but we are buying anyway. The trick is to find stocks that go up faster than the dollar is going down, basically.
And since we're talking things that are on the move, Liam, it seems like we have a momentum move swing back towards tech. We thought we were going to be off tech for longer, but it seems like the pendulum is swinging back.
Yeah, the market's sort of taken a bit of a breather over the last 3 to 5 months on the big semiconductor stocks like Nvidia, and really focused their money on memory stocks. That's played out this week, so it was a very interesting set of results last night.
It was, and we're going to go over them. The market hit a milestone yesterday as S&P 500, the index in the US, touched at 7,000 for the first time ever. It pulled back slightly before the market closed. If I look to the futures, it looks like it's going to pass 7,000 again today. Gold broke another record. Oil is climbing because of the tension with Iran. The Fed hold the rates, and the window for another Powell cut might be starting to close as he's giving up on the main kahuna job at May 1st. The US dollars is slipping, basically because there's a fear of debasement that's in focus right now. And as mentioned, Max 7 were up yesterday. Microsoft got punished after earnings, Meta surged, and Tesla avoided a crash. In the Nordic, we had numbers from Volvo yesterday. We're gonna give you those today because we didn't have time for them yesterday. And Nordea posts some resilient numbers after the fourth quarter. We have SK HYNIX, Samsung. I don't know if we can fit it in 26 minutes. We'll try. First of all, number of the day, 42,643. And that's the growth over 10 years. It's definitely not the oil prices for sure. It's part of macro when we talk oil, because oil prices inching up, Hans-Henrik, gold flying up, dollar is dropping like a stone. What's going on?
First of all, the dollar is, you could say that's a big thing right now. Let me just pull up what is called the DXY, which is a dollar index, a basket of a dollar towards a basket of different currencies. As you can see, that has dropped dramatically. And I have a feeling that is Trump's plan. He wants to make the dollar cheaper. That makes export from US easier. It has a lot of side effects like inflation and higher prices overall in US. And the oil, of course, is going up as well. That is not just due to the dollar. That is also because Trump is flirting with bombing another country, maybe kidnapping the leader or whatever. That is, of course, Iran, where he has, in his own words, sent an armada down there. So why would you do that if it was not to bomb something? So there is a lot of macro. We are never trading on the macro itself, but we are having it as a sort of an extra layer, understanding what sectors to move in and out of and so on when we use the 3-point playbook.
Hans-Henrik, I'm going to ask you a couple of macro questions here, because what we hear as normal investors is that Trump might just keep printing dollar. That, of course, will bring the dollar further down. But there's also the Sell America, where Europe sells the debt of America, and that'll bring the dollar down. Are we not in a catch-22 here, basically, that the dollar is going to go down no matter what?
You would think so. The thing is that with all the Greenland turmoil and all that, people were saying, why is Europe and Japan and all that, why they're not just selling out of all the billions and trillions they have in US debt? The problem is that would tank the bonds, so we would lose a lot of money. If Trump, however, wants to devalue the dollar down a lot more, then we are sitting on bonds that is just getting worth less and less because they are in dollars. So why not sell them now? You could ask yourself, and exchange them into euro or yen or Swiss franc or whatever you could. Trump wants the dollar cheap. He has seen how China became a big production country by doing that. The difference is that US has the US dollar as the world's reserve currency. If people lose trust in that and think it'll just plummet, then they can't be the reserve currency, and that sets the whole economy in a whole lot of fire in new ways. We are writing about that for our members. I'll not tire you with that right now.
Thank God.
The thing that he almost tied himself on it, Liam. It is super interesting, and it is affecting us as investors. As we said, we're looking to buy stuff, but we're also looking at the dollar with the other. I'm just going to say the other eye. We only have two, so it will be hopefully moving the.
If I may,
but that again.
Oh no, sure. Jesper.
No, I was just again saying that thing that you have to basically beat the market twice. If you have a dollar going down, your stock needs to go up more than the dollar drops.
Exactly. We are diversified. So we are both in Europe and US, but we actually have a lot of US stocks right now. And we know from the dollar just this year, since here, has gone down a couple of percent. So that is handicapping us a bit. However, we're still up 4.94%. And the S&P 500, when you deduct those couple of percent, the dollar have dropped, is barely break even. So we have till now succeeded in picking stocks that runs faster than the dollar drops. And that is a trick of it all.
And we need to run faster this show because we have so much content for you guys. One of the big companies, the Magnificent Seven companies that came with numbers yesterday and earnings, was Microsoft. And Liam, Microsoft, weren't they put around the ringer here because it was not that bad, and still they got punched.
Not that bad isn't good enough these days for a hyperscaler that's spending, I think it's $26 billion on just this quarter coming into on chips, on AI manufacturing and things like that. They got hit a little bit. Their numbers were pretty good. Their numbers, I think I mentioned the other day, all the numbers, what people are looking for at the moment, they're looking at whether the margins continue. So the company is making as much money per dollar of revenue in profits that are coming out, whether they're getting squeezed or not. If there's any indication of the return on investment either being pushed back or being pulled forward, that will have a big effect. And also the growth of things like Azure, which is Microsoft's cloud base. That's what really took them down last night, and everything else was good. The AI is actually pretty good. Copilot, the M365 Copilot license is actually in 15 million people's desktops at the moment, which is higher than Google. It's higher than everyone else. It doesn't sound a lot for the hype, but and they've got 450 million people they can sell it to, but they're the leader at the moment. The real killer for them last night was that they announced that Azure only grew by 37.8% and the market expected 38%. So they missed slightly on that, but also they said, and actually we only think it's going to grow 37 to 38% this year, which it's a huge number, but
I would say.
Yeah, I mean the last quarter was 39%. This quarter is 37.8. It's decelerating, and that's what investors are punishing Microsoft for. Is it a good company? Absolutely. I mean, they dropped. I don't know what. I haven't actually looked in pre-market now, but they dropped down to this point. They're a quality company that just got even cheaper for us. So to my mind, I think there's a potential there to buy. We wouldn't do it right now because it was just skirting with popping up above the 200-day, but that's now just down here. So we wouldn't buy, and the MTIs are in red. I know, I'd imagine that the MTI will be in red today. But at some stage, the issue you got with Microsoft compared to the others, they haven't really got a common narrative on how Copilot is going to change their business and interact with their customers. Not as close as Google have got or Meta have got or someone like that. So I think that's where they're struggling.
Is it also because the people think of them as a software company, and it seems like AI is going to take care of all software in the future, and therefore they have no business?
Yeah. I mean, AI is going to be fantastic, isn't it? When it can actually work and when it doesn't hallucinate. So, if you've got the top guys at Anthropic, at OpenAI, saying hallucinations are a part of this current technology build that we're doing, they will never get fixed. Therefore, how can you trust it to go and write a massive program like Microsoft Office? I don't see it happening.
In the prediction future, or in regards to still going to work or not, but we'll definitely keep an eye out for micro. There is no doubt. And working quality companies, but I can say that what we're entering on the screen here was a little bit of
oh, we lost Jesper.
Did we lose him?
I think we do.
No,
well, while you talk about Tesla, oh, you're here. I was going to say, if you're going to talk about Tesla, I'm going to go make lunch or something like that. I'll be back in an hour or so.
Yeah, we lost you for a second, Jesper. On the.
I'm sorry about that.
Let me just take over. It's all about Tesla, so I'll speak for an hour. No, I'll do it very quickly. Tesla came out with earnings. Of course, they went up a bit in the aftermarket. One of the reasons is that it looks like they're getting the drop in free cash flow a bit under control. That has been dropping quite a lot. And they stopped that drop now by cutting their capex, meaning they're investing a bit less in the future. So Elon talked, of course, a lot about the future, and that is, of course, why Tesla should trade at a PE of 288, which is absolutely insane. When you look at it, the earnings into the future, it could look as if there was some good upside in it. However, if you start to look at a company like, for instance, BYD, I took this one up to a ridiculous level. If you look at BYD, they're selling at a PE of 20 to 30. So just quickly, if we bring Tesla down to a PE of 50, meaning double the valuation of BYD, you get a loss of 70%. This is the reason why we are not in it. We don't think Tesla is a bad company on the fundamentals. It's actually a decent company. I think the valuation is completely out of control.
The summary I came up with on my tech article today was really focusing on, it seemed from the earnings call that was all about how good we're going to be in the future. They're pivoting away from being just an EV company and looking at robotics.
They are investing a couple of $1 billion into XAI.
Even though the shareholders said no to that in October.
Yeah. And then they, as 95% of the valuation is based on stuff Elon promises for the future, which is absolutely crazy since he has not fulfilled much of that for the last 12, 13 years. Don't get me started on that. I think it's too highly priced. That doesn't mean it can't go up 1,000%. It might, if people are willing to pay a PE that is high enough. I'm not buying.
See, that was a quick take on Tesla from Hans-Henrik, and I'm going to note that down. The date is January 29th. He was fast on Tesla. Let's move on to another stock that we want to bring up, because Meta, of course, was on the dock as well yesterday with new numbers, and we spoke about them on Tuesday in regards to their premium memberships that they want to do, Liam, and that is going to bring in a lot of dough for them in regards to. And not a lot of work, by the way, because they're basically just giving people a little extra and pocketing did you say £4 that your wife was offered that she could become a premium member?
£3, no, so £4, yeah, for a month for not having ads directly in her feed. So she'll still get something. So, yeah, it's an interesting business if you can get it with 2 billion average monthly users.
And their stock surged yesterday, not just because of that news, but because of their earnings as well.
Yeah, to be honest, they didn't really talk about that much on the earnings call. It was mainly about the ad spend that their customers are putting their way. Basically, Meta have turned out to be one of the best companies at connecting companies to the clients that they want to actually sell to, that make it more likely to buy. So, and they're doing that through using their own AI tools internally to actually target ad and content directly at people who are going to watch it more. So they're being very, very clever at that and very, very successful. So the earnings had quite a large beat on what the analysts expected, and they were saying the guidance for this year is going to be great as well. So the two things that sort of hammered Microsoft are completely opposite in Meta. And I did say on Tuesday when we talked about it briefly that actually what people forget about Meta is that they are a phenomenal ad company, and they're very good at what they do, and they've been in the doldrums for a little while. If I look at the value chart here very quickly, I mean, they're a quality company. I won't go through the playbook on this because they're one of the best companies in the world. You can see I've set the bear case, that the worst case scenario, down to where it's been at the bottom of the cycle over the last couple of years, 3 years. And same with the green top. It reached a peak last year up here, and the blue line is where I actually think the stock is going to end up. And I've put it, I pretty much agree with the analysts there. So we can see, if we held this to the end of the year, our worst case scenario means we might lose 3%. Absolutely fine. Our playbook, that's about our average that we lose more recently. But we could see a 26 or up to 50% growth in there. So it's a very, very strong company. It was sort of just hovering. It's been using the 200-day moving average, this black line here, which is just the average of the last 200 days closing prices. It's been using this as a resistance point, hitting it and then bouncing back down. It's up here, up 10%, 11%, something like that. So it's going to start up here. It's broken out the trend. Very, very interesting. The thing is, for us, you take 11% off of these numbers and add take off 11% there, suddenly it doesn't stack up. A minus 13, 14% risk against just earning 15%. We would want to see 30% positive, and that as the base case for us to even be interested.
And then we have the dollar as well.
And then you have the dollar as well. If it's a good company, we know that our stocks outrun the dollar. It's down 13% in the last year, something like that, and we still made a stonky amount of money last year on those stocks. So it's something to bear in mind, but it's not something that's going to stop us buying a quality company.
Since we're talking about it, then let's move our focus, because a lot of our members are asking in regards to, isn't there anything in Europe? Isn't there anything in Scandinavia that we can jump? And since we had numbers yesterday from Volvo and today from Nordea, I'll refer that question to Hans-Henrik and say they might not be as sexy and glamorous and blinking lights and what have you, Nordea, as you can see in the video, to Meta and the others. But this is a sound investment for numbers today.
It was a bit boring, to be honest. There was not much in it. They were hitting spot. I know we normally say we invest in a boring way, but this was just there was as expected. They basically hit the numbers, a bit lower return on capital, but overall. It's not a company where I look at the quality, and they have a quality of 32, but that is a bank, so to forget that. We should not look too much into that here for the banks. Earnings per share going a bit sideways. They're not really what we would be looking for. But when we go into the value chart, you can see why we would not buy it right now. The banks, a lot of the larger banks have had a great run. We called that last year as well. Right now, they are in the expensive area, and they're not growing too much. The value channel is a bit sideways. The absolute best case, about 25% upside, but what we aim for is the base case, and that is a break even with a bear case scenario of minus 18. So that is not worth it.
One quick question, Hans-Henrik, because of course it's a bank. I'm almost going to say they always, or not most of them, play out dividends. Shouldn't that be added on top then?
Oh yeah, well, you can do that, but when you have this larger divergence, when you have a minus 18, there are a few companies, not the larger banks, but there are some of the few some companies that pay out, say, 25 or 50% in dividends. Some of the shipping freight companies, something like that. Then it's a big thing. But with these banks, it's not really. We are only looking 1-2 years ahead, so it's not really making that much of a difference. So right now, I would definitely not touch it.
Yeah, I would add to that. We get asked this question from time to time, why we don't take this into account. We're more interested in the fast growers. going forward, and they tend to be tech stocks which pay you less dividends anyway, going in what they do. But that's what we're after, is that snap growth that we can earn 23% on average. I think we do at the moment on a company, and just take a small loss. The dividends, companies tend to grow slower.
And that's just by thumb rule. In that sense, you can see it over all the dividend stocks that they don't grow as fast as.
Well, they are solid companies. There are people that only buy dividend stocks. It's just that the company normally drops the same amount that the dividend is paid out, and then you get taxed on it. So it's not really my thing.
Okay, let's do Volvo, because yesterday they came with earnings. We didn't have time for them on the show, so we pushed them for today. They went up by 2.6% yesterday, sitting pretty average today, not moving a lot. What about Volvo? A company to buy?
Yeah, good quality company, 73. We know the trucks, not the cars, but the trucks here. Had a drop in earnings per share. Seems like it's finding its footing again. The free cash flow is absolutely fantastic, and they're not dragged down by too much debt. So that part is great. When we look a couple of years ahead here, I have picked a bear case at a P of 13, and then a P of 20 up in the bull case. That gives a reasonable upside. It's doable. -6 towards 17-18%. That is absolutely fine. Should I choose between this and Nordea, I'll choose Volvo any day. Absolutely. Just looking quickly at the trading view here, the trend is very good. We are in double green. We are above all the moving averages. So definitely Volvo could be a thing.
And I know that you guys are looking for the upside is steep, and that those graphs move higher and faster at the same time. I think I can pitch you one of those and simply bring up SK HYNIX that we have talked about this week a couple of times. And Liam, since it's Thursday as well, I'm going to search up for HYNIX. Came before the markets open here in Europe and Asia.
Yeah, they had a storming results yesterday, and we knew they would as well, because they're at the forefront. They're the #1 memory producer in the world. So they've just been selected to provide 75% of NVIDIA's HBM4, the high bandwidth memory, into their new chips coming through. So they're a market leader. They're the one to beat. They knocked it out of the park in every single metric they've got. The massive rise in memory prices has helped them as well. They're investing. The issue that you've got going forward here, we can see there's potentially 57% at a downside of -9%. So it's a great company. The two issues you've got are, one of them is it's very difficult to trade in the Korean exchanges. They are opening up their markets, but I was looking at Interactive Brokers, which is my accounts, which is supposed to be able to trade it, but I can't at the moment. So they've been opening up this year. The other thing is there is a massive build out of fabrication capability within these companies. It's going to take a year to come on stream, maybe a little bit longer, but then you will get a glut. So at some stage, will stop going up and will start going down. When that is, probably sometime next year. But they've got visibility of earnings sort of out to 2027.
They overtook Samsung in annual profit for the first time ever, beating out a company that they have been, I won't say compared with, because that's not true, but it's basically out in that region, two companies that are household names.
Yeah, definitely. I mean, Samsung got a much bigger portfolio out there. So they've got mobile phones, which really struggled, actually. The Android phones dropped by about 10%. I think it was 9% something. And that's really struggling with the memory. So they're having to put the prices up of their handsets. Apple, by the way, yesterday came out and said they're going to try and keep the price level. So that might eat into their margins, which could cause problems for Apple in the next week or so. But from the Samsung side of things, it's all about the chips. They make memory, and they also are a competitor to TSM, Taiwan Semiconductors. So and they have just gone off the charts as well. They're probably an even better result. They've just got ratified by NVIDIA, I believe, for their high bandwidth memory. And the sky's the limit with Samsung. You can trade it on a proper exchange, English. So you can trade it on the London Stock Exchange, and there's decent volume for that.
And that is important. We are laughing, I know, because it's an internal joke that you sort of always stomp the British British, and it's good to see something is coming home. Football is not. So, but anyway, in regards to it is something we look to, that we have a volume where we don't get affected if a big elephant drops a lot of stocks or buy a lot of stocks.
So basically, we're looking for liquidity in whatever market we're going to. Samsung, the depository receipt on the London Exchange has quite a lot of liquidity. It's about 40 to 50 million sterling a day that gets traded. So it's not huge, but it's enough. SK HYNIX does trade on the German exchange, but it has around €3.50 being traded every day. I might be paraphrasing slightly on that, but there's not a lot. So if you had to exit in a hurry, you might really be in a bloodbath with the stocks.
Well, so I can see double green on the Samsung thing. It's definitely one that we have on our radar for sure.
Yeah, it's an awesome company.
It's tempting. Let's see what happens if you are a member at MyStockScanner.com. You, of course, will be in the know when it comes to us changing things on the playbook portfolio, because that's how it works. We had a number of the day, 42,643% in 10 years of growth. The company is Applied Digital. Number 2 on the list, by the way, over the last 10 years was Nvidia. It went up by 23,152. Why didn't we get in 10 years ago, apart from that we didn't know each other then?
Yeah, that was stupid because, well, they have a website that mentions AI in every second sentence. So why wouldn't it go up? No, the reason why we're not in is because they're not making money. So we're not buying a company like this. This is not a bank. That could have been a big excuse for a quality of 7, but 7 is about the worst. Earnings per share is lousy. Revenue is going up. Doesn't matter if they're not making money, basically. Negative free cash flow, that is a complete no-go, and they have to borrow to pay the interest on their debt. So basically, yeah, that would have been funny being on this ride, but I'll settle for 34.5% last year and not being on a shipwreck like this.
You're basically strapped to a rocket, and you just hope that it has a parachute that waits at the end. We're not going to talk more about that. It was just the number of today, and sometimes we bring up some funny ones, but there was a little learning moment in this one for sure. When we are back on tomorrow, on Friday in Danish at 12 o'clock, we will have the joy of talking about Apple and Amazon. We could also be talking Visa and MasterCard, because that's some of the names on the docket in regards to earnings coming in. We are in the big earnings season right now. And again, before I let you go, Liam, we will be broadcasting in English on Tuesday at 1 o'clock. But Liam, let me hear about Apple, Amazon. It's in your niche, the tech industry. Tell us what you're expecting.
Apple, I suspect they're going to have their margins hit by memory costs. Either that, or they're not going to upgrade their handset with quite as much memory like they did last time. They gave away quite a lot of new memory for the same price. So I think they're going to come under some pressures there, which the market may not like. Amazon, their AWS, their future build out that they've got penned in, they've actually got money for and clients for, is much less than Google and also Microsoft Azure. So I think they're going to come under pressure from their AWS, which is their biggest operating division. So I could see negatives for both of those companies.
Hans-Henrik, I'm going to put you on the spot, because this week you have been talking about the fear of another shutdown in the US. I saw a headline that Democrat Schumer was negotiating directly with Trump to avoid that. It's Thursday, tomorrow Friday. Are we going to see a shutdown in the US?
I don't see an option for Democrats to keep funding ICE. That is basically what is shutting down the government. I would still say there is a 70-80% risk, I would call it, for a shutdown, and that will just be a mess.
There's a 100% chance that we're broadcasting tomorrow at 12 o'clock. I can promise you that, no matter that we didn't get to see a video of Elon Musk dance today. Maybe that was why they stopped it. Somebody played around with our little video there. This was Thursday's MyStockScanner Live. The weekend is near. Stay focused and let our playbook guide you confidently. You sleep better tonight, I promise you that. We are back on air tomorrow at 12 in Danish. See you then. Happy investing out there.